Let's bring in our next guest, and that's going to be Phillip Streible. He's a chief market strategist at Blue Line Futures. Welcome to the show, Phillip. Oil finished the week up just over 1% and continues to consolidate in a pretty tight range between about $37, $36 a barrel and about $43 a barrel. With lockdowns, and the virus starting to, accelerate over in Europe, and maybe a second wave coming here in the U.S. What are your expectations for oil heading into the next week? Are we going to remain in this range, for the near-term future?
Yeah, there's a few variables that are impacting oil right now. First of all, if you do back it up and you look at like the broad base of all the commodities, only about 9 out of 27 commodities finished up on the week. A lot of that played a role with the dollar index rallying off of its lows. It was completely oversold, started to come back up. What I don't like about the oil chart is if you start connecting the highs from the start of the year, that August high and then the recent high, it signaled lower highs. Now, going to the fundamental story, yes, the possibility of increased lockdown, increased travel restrictions. I've talked to some of my friends. They just recently had additional flights canceled out of the country. So you could tell that, that demand for oil, it's not coming back online. The dollar index, I do think, really played a big role in it. And oil is found a comfortable space between 41 on the upside, about 39 to 37 on the downside. If we break 39, we should see an accelerated move down to 37.
Yeah, and we did get some decent pulled drawdowns in some of those inventories numbers this week. But if you turn it over to gold, I kind of wanted to discuss that a little bit. Gold's hanging on to that $1,900 an ounce level, but it was the first down week that we've seen in about 3. Dollar moved a little bit higher this week. Where do you see gold moving over, the next few weeks into this election?
So when you look at these commodities, they're fitting in like 2 different baskets or 2 different hats they're wearing. One of them is one that is relying on stimulus measures and fiscal and monetary stimulus, and then the other one is impacted by the weather right now. Those are like the wheat market was the best performing commodity of the week, but gold is most likely going to hang around 1900. Being a trading affair, it was weighed in by some of the other metals, like silver was one of the worst performers, platinum, palladium, they all weighed in on the market. It really is those stimulus measures that it needs. It's going to be a good environment for gold. Gold is going to be a great long-term trade, especially in a 2021, because of the low interest rate environment, that stimulus, all these different economies around the globe, they're all continuing to expand their balance sheet. So we just saw the dollar index come off its low. The inverse correlation is quite high between the dollar and gold, and that's why the pressure was there this week.
Definitely there, and see if the gold bugs like it hold in this 1900 level, see if it can hold there, maybe expand a little bit next week. But I think it's all going to be dependent on that dollar, as you mentioned. But now let's move over to another precious metal, and that's going to be silver. Silver's had a nice run this year, 35% higher on the year. It's got that industrial use a little bit better than gold might. What are you looking at in silver? And I know we've got something we're going to talk about here in a minute in SLV, the silver ETF, but what are your thoughts here on silver?
Silver is one of my favorite commodities. Okay, it always is. It's the poor man's gold. It does have about a 20% precious metal exposure, and then the other 80% of it is industrials. What I think is going to happen is once we get past this election, we're really going to this, zero carbon emissions, more solar, more green type environment. We're talking about canceling cars that are, gasoline cars over in California. So this big green initiative, the largest input in that as far as a commodity is silver. So silver demand is going to increase. And I really believe that once gold gets going with the stimulus and the environment with the Fed, gold gets going, silver is going to get this double whammy of a boost. And I think that's where silver goes into next year. I really believe $40 and $50 is achievable. And I do see the downside as limited. So I think that buying these corrections in silver, appropriately scaling with, your personal portfolio, that you have the allocation model, I do believe silver has good values. And when we dip back below, $23, $24, I think those are good buying opportunities.
And you're looking at the silver ETF, that's ticker symbol SLV, up 34.4% so far this year. So this is the way that you would play silver moving forward, especially because a lot of the industrial stocks have done really well, Philip. And if you see that expanding more, you're probably going to see silver movement higher, right?
Yeah, I mean the first initiative for them to do is to boost that industrial demand, and that's what's going to happen. So we already saw copper. That was like the first commodity that took off out the gate. China was aggressively buying it, and that's the way you rebuild an economy is through infrastructure spending and things like that. It creates jobs, and then if you get some of the demand for silver, like any manufacturing job, every manufacturing job created, they create a product, okay? And the product does require things like silver. In order for that product to go into whatever the end result is, say a car or a cell phone or something, 7 additional jobs need to be created in order to implement it. So it's the best way for the government to try and get jobs back into the economy. And I think silver, it does have all these benefits that are out there. The problem that people have with silver is they completely overload on it, and then silver does have some kind of correction because it's higher volatility, higher beta. So that's why I said you need to have a plan. Use these weekends, draft out a plan on how to attack silver and play it to the upside. We do futures over at Blue Line, so we are looking at a call spread in the silver futures. But I think that from a retail standpoint, the SLV is a good way to play it.
I like that. You get that exposure, that low-cost entry point here. We're using ETFs. That's a good point there, Philip. Good insights on the commodity space. Thank you so much, Philip. Have a great weekend. That's Phillip Streible, Chief Market Strategist at Blue Line Futures.